Barnes Noble may have found a big brother who isn't between the covers of a copy of 1984. Microsoft is investing $300 million in a subsidiary that'll do the digital business, the Nook e-reader, and college textbooks. That actually values it at double what the whole company was worth on Friday. Rob, what does it mean?
Well, it means for Barnes Noble, the problem is that obviously print books are dying, and the problem is they've got a new book reader, the Nook.
Right, which is quite popular.
Which is kind of popular, but the problem in tech is kind of popular is kind of failed.
Right. But they have grabbed, I mean, the truth is they grabbed quite a big slug of the market share in e-readers, even though they came late and didn't really have the backing to kind of get there.
But I think that was it, right? They didn't have the dollars, or maybe the real commitment behind it, and now maybe they do.
Well, exactly. Now they get the $300 million from Microsoft, and additionally they're getting like about $75 million a year for the next several years. But the other thing is that they're going to be put on all Microsoft's the new devices coming out with the new operating system, and there's a possibility. You know, what does this mean in the future? They're getting a big pocketed company, and if you think about it, if you're competing against Amazon, you're competing against Apple in markets where you tend to have one company winning the entire market, it's nice to have someone big over your shoulder.
Well, this was a big, you know, this is a sort of a follow-on from about a year ago. There were these massive fights over both Borders, another big chain, and Barnes Noble. Borders wound up going bankrupt. Barnes Noble wound up getting investments from John Malone. And the question really was sort of what was the trajectory here? And then they came out with this idea to spin off the electronic division from the print division, you know, the regular traditional brick and mortar bookstores,
has to be kind of leaving the bookstores to sort of fester.
It does. I mean, the question though is that the bookstores have really been the big promotional vehicle for the e-readers. They've converted a lot of store space, you know, for them, and how that all works.
And they make all the money too. I mean, the Nook has lost a lot of money over the past couple of years, and what they've done is they've used the cash flow from the stores to kind of feed into this. The company said, you know, they're going to. It's obvious that they are going to split these businesses up, but it's not going to happen over the next couple of years.
The question also is sort of the analogy is the music business, where yes, digital book sales are ramping up, but not nearly fast enough to catch up with, you know, the decline that's happening in sort of print book sales. How does that? I mean, is this enough money to tide them over, basically?
Well, I mean, the market seems to think, you know, they've given them a big bump, but they're still trading far below the value of the investment that Microsoft's given. So the market is still saying, you've got a better chance than you did yesterday, but your chance is still kind of low.
And probably the bricks and mortar is still a drag on the like whatever you're going to do digitally.
Yeah, exactly.
Yeah.
Okay, we'll leave it there. We'll be keeping an eye on the next chapter of the Barnes & Noble story, and we'll have more breaking views tomorrow.